Good morning, investors. Hopefully you guys are having a great day out there. If you're long this market, you might have a little bit of a tummy ache today because many stocks have been selling off, and it appears it will likely continue today and maybe even the rest of the week at the very least. So what I wanted to do was jump in here and give you kind of an early update on all the FAANG stocks plus Microsoft and Tesla. We focus on those stocks because they have pulled this market to the upside, and they can pull it right down if these stocks continue to break down. So I wanted to go through all the FAANG stocks, Microsoft and Tesla, and show you what levels we're approaching, if there's any levels of support, if there is an opportunity here to go long or to buy these stocks, or what kind of strategies I might take in the coming days and weeks ahead as we're starting to see weakness in these names. Now, let's start things off with Facebook. We're pulling back to levels we haven't seen since, January 15th. So keep that in mind, that we're pulling back into levels that in many of these stocks we were here a month ago or 2 months ago. So that is the first thing to understand, and understand that we do see big rallies in these stocks to see them pull all the way back down and then go all the way back up. Things do not go up in a straight line. And in fact, if they do, that should make you more nervous than when they come down. Now, Facebook is pulling to a zone here where I have marked out just 247 or so. Again, these numbers are not perfectly exact. I wouldn't, especially if you're doing options trades or things like that, I'd really come in here and try to maybe locate these numbers on a shorter time frame. But 247, we're right now at about 257 in kind of the pre-market trade in there. $10 can easily slice off this stock very quickly. That would be the first level where I'd want to think about Facebook. Again, when these levels come up, it's not a hard and fast rule, because if you slice through this 247, guess what? We got to go completely back to the drawing board, because this 247 has held since August of last year. It held here, it held here, and it held here. And if it doesn't hold, well, guess what? You're coming all the way down here probably. You're coming back into the low 200s. Okay, and maybe very quickly. So that is the first thing to recognize when you start identifying levels, that if it slices through very quickly, like maybe we saw here, well, guess what? Maybe you don't want to come in here and dip by at 259. Maybe you want to wait and see what the next candle brings. And if it's down, then you're probably looking at this next level. So with Facebook, I'm looking at about 247. See what happens when we get there. Can it be today? Can it be tomorrow? Can it be Friday? We'll see what happens. We'll certainly update you when we get there on Friday. Now, Apple is pulling back to levels that we haven't seen since January 19th. So it hasn't been that long. It's been about a month. So we're pulling back into this box here. And when we pull back into a box, I look at the bottom end of the range, $120 a share. We're only about $3 off of that one. So I could definitely see us testing that lower end of 120. I think more excitingly is down here in the 112s, anything one teens with Apple, 113, 114, 115. That's where I'd get a little bit more excited. Chances are, if you're watching this video, you're long either like an ETF or Apple or kind of a mix of both. You're very, very exposed to Apple. Okay, you have a lot of Apple position in your portfolio. So in my opinion, it would take a deeper pullback in this name to want to add to more of it, because chances are you've got very significant exposure to that one. And so I'd want to see it pull back into this 110s. Whether or not we get that opportunity, we'll see. Again, 120 is the mark that I have marked out here. If you get a bounce at 120, it doesn't mean that the downtrend is over. It just means some buyers have stepped in, and that actually could create more selling pressure. As notice all this price action up here. This is like people, okay? Think of this as like people that bought this stock, because it literally is. Okay, as these guys are feeling the pain right now, okay? As this stock goes down to 120, if you bought it up here at 148, 150, you're feeling the pain on this one. And as it bounces, you're probably, the likelihood of you wanting to sell increases. And so it's going to be hard. The more downtrend you see, any kind of uptrend will create, selling opportunities for the people that got higher, not buying opportunities. So I would not necessarily be aggressive as we hit these levels, lower end levels. I wouldn't be aggressive, like unload your whole Robinhood Gold account or unload your whole margin account because you have this level marked out. It's a place where you could nibble and dabble and see what happens. Moving on to Amazon, this one's pulling back into a level we haven't seen since January 29th. So it's been, a couple weeks since we've been at this level with Amazon. We're sitting here at about 31.81. We'll see what happens during the regular session. I am recording this before the session has. I got a tea time here in about 30 minutes. So we were sitting here at 3,100. It's a level I have marked out with Amazon. But boy, we're right there, okay? We're 31.21. We're basically $21 away from this level. So when you're that close to a level, I'd start looking for other levels because the likelihood of that one piercing is probably relatively high. That's not a high conviction area, but $3,000 actually, probably from a psychological perspective with Amazon, $3,000 is an interesting level. I would not necessarily want to step in here on Amazon until you saw that level either 3,000 hold and hold significantly, or maybe it breaks 3,000 and you go lower with Amazon, which in my opinion would create a strong buying opportunity. But again, with a lot of these stocks, we're really at levels that we saw just a few weeks ago. Netflix. This one is down here, actually hugging right here at 520. We've had 520 marked out in this stock for a while. Now, the thing is with Netflix, it really tends to it's doing exactly what the market is doing. So it creates these big blow ups. So it goes on these huge rallies and then comes down, goes on a huge rally and then comes down. I would actually anticipate Netflix kind of blowing through this 520. If it does, I think you've got some good opportunities down here. The best one is all the way down here at 470. So you'd have to have a significant sell, another, $50 in the shares. 470 is where I would really like to see Netflix. And so if you get a broader pullback, which again, we've seen several times over the last 6 months or so in this name, that would be interesting. This stock is trading right now at a level where it was at in January. In fact, it was lower than that at the middle about a month ago. So, keep that in mind. When you see these declines, we're really declining to prices where we were just a month ago. And chances are you weren't worried, you weren't scared a month ago. The only people that are scared are the people that bought way up here or over levered in terms of options or margin. And all of a sudden now they're worried. That could create great opportunities because those people are not investors. They are speculators. Moving on to Google. Look at Google. It is just sitting right here, right where we kind of started this next gap. We've talked about this on our FAANG stock recap show. I don't like to trade momentum on these names. Now, it certainly would have been profitable, would have been the right thing to do in terms of outcome with Google. I don't like to play this. I like to play pullbacks, and we're getting one to the bottom end of this range, but it is teetering right now. And given the market sentiment and kind of the worry that I am seeing out there, I wouldn't necessarily want to jump in on this one. I think a Google down here at 1923 could be interesting. 1920 just to round it off could be interesting. I wouldn't necessarily want to step in here. I see this big sideways consolidation down here. This is where a lot of price action in it. This is where I would anticipate buyers stepping in with a Google, and that is from about 1725 up to about 1820. So I know that's a relative, $100 range or so, but this is where I would see support step in for Google. You've got this big gap here. If we have a candle slice through this gap, it's probably coming down to 19. At that point, the trend will have reversed. You probably have more people get scared out of this one, and this is where I would look for with Google. Now, Microsoft. So Microsoft is a name I want to get in very, very, very badly. And so this is, I might be a little biased when I review this one because this is a name I want to get into. We see here the stock is at about $230. It's sitting kind of on an intermediate trend line. And guess what? Microsoft was at this level in the end of January. So it's been a couple weeks since it's been at this level. And I didn't buy at that time. What I see with Microsoft is we have this pretty large sideways consolidation between 210 and about 224. So we still got a solid on the top side. You still got about $5 or $6 for this one to drop, and on the downside you still have about I would call that actually $20 to the downside. So I would wait here with Microsoft, see what happens if we can pull into this sideways. Man, this sideways consolidation from 210 to 216, 217, in my opinion, is not a bad area, at least on the chart. Again, when I talk about these areas, I'm talking about taking stock of it at that point, okay? Just because I have a line here and now Microsoft is sitting on it doesn't mean I'm a robot and I come in here and I click buy. I want to take stock of what's happening. We have a big gap. We have a large gap and a big red candle. I don't necessarily want to step in on those days. Now, I'm not waiting for a rebound here. If it rebounds, that could definitely be a positive thing, but it could mean that just some buyers have stepped in, or it's a time to go short for some people. And so this thing could continue to resume a downtrend. But I'm looking down here with Microsoft between 210 and 216. That'd be the first area where I'd want to step in on this one. Now, finally, Tesla. Now, it broke our area I talked about on Friday, where 776 or so was a key level with Tesla. And I would think about on Monday, depending on what was going to happen, because you see here, the stock bounced, it bounced, it bounced. Okay, that typically means the stock wants to do something here, okay? And it broke this 776 level. Now, it's approaching, and actually, it's pierced our next level. Our next level was 696. I talked about how these candles was like a rock skipping over like water, like, so you're skipping rocks and it goes okay, that was kind of the price action that we made here. And if we broke this level, well, guess what? It was coming down, and it's coming down. It looks like it wants to hit 650 at some point. And I have marked out down here at, we'll call that 540. So 540 to, I know that's a large range, to 650, but when you get these stocks that are like hundreds of dollars, sometimes the ranges stretch out a little bit. Now, even more beautiful than that, take a look. We have this sideways consolidation down in here. And you might say, oh, it'll never get there. Well, it was back there in like October and November, so it wasn't that long ago. So you got about 334 up to about 450. Okay, I know if you've recently bought Tesla, that would give you a big tummy ache, that if it came down that much, we're talking another $300 off the share price, even more than that. Okay, I'm talking like really bear case scenario here, but this is not where I would first want to step in, but this is where I would anticipate a lot of other people wanting to step in at this price action. In the intermediate term, we have a little bit of consolidation in price here. Again, that is from about we'll call it 540 up to about 650. Again, we're approaching that now. We're about $20 or $30. I would anticipate the stock to bounce at this level or come into this box and want to chop around a little bit. Whether or not I want to step in, again, take stock of where the market is at that time. If you're seeing big red candles, you might just want to take a breath. Make sure you have some money ready. If you're over levered already to Tesla, you have options and you have, you've bought this stock on margin and you bought it up here. Well, you want to probably de-risk your portfolio just a little bit and wait for opportunities to come in here. Again, great investors buy low, okay? We don't necessarily want to buy high. And I will tell you, buying low is difficult. I know it sounds easy to say, buy low, sell high. It's easy to say. It's actually difficult to do in practice, because as stocks go lower, it gives people more and more tummy aches. And you read CNBC and you see the news and you watch YouTube videos that are doom and gloom. This market's done. Okay, it actually gets very difficult as Tesla shaves off hundreds of dollars off their price to come in here and step in and buy. But I'm telling you, that is actually what great investors do. But you have to do it with discipline, and you have to do it with a plan. And so the plan is, as these stocks pull back into here, you take stock of the situation. I would nibble with the stock like Tesla. If you have a small account, you want to nibble with fractional shares, okay? You want to nibble with $10, $15, $20 at a time. If you have a much larger account, tens of thousands of dollars, I would nibble with 1 or 2 shares at a time. Okay. And then if you have a gigantic account, you can kind of go from there. But chances are the majority of you watching have a quote unquote smaller account where a $600 buy is actually a pretty large position in your portfolio. So in that case, you want to nibble on these larger stocks. When we're talking about stocks like Apple, which are like $100, $120, if and when it pulls down into this 112 area, then yes, I think you could come in there with a full share, 2 shares, again, sizing based on your portfolio, but we're not going all in. We're not unloading our entire portfolio into it, not tapping all the margin that we may or may not have in our account as well. Okay, leave some powder on the side just in case you get deeper pullbacks, because if we start piercing these levels, guess what? There's price action down in here, okay? Down at 80 and 90 bucks. Okay, we were at 80 and $90 at the beginning, and actually the middle of last year with Apple. So you better believe the stock can get down there, and it can get down there in a hurry. And so if it does, you're going to want to have an opportunity to buy, because that is buying low. This is not necessarily doing that, at least in the shorter to intermediate term. So just wanted to give you a midweek update. We'll be back again Friday to see where the price action ended on these ones. Good luck with your guys' investments. Thanks for tuning in.